Sensex fell by more than 1500 points on budget day, and this was one of the worst budget day performance in past 6 years. It all started with STT hikes on derivatives. Futures STT got raised by 150% and options STT saw a 50% rise, which instantly suggests two things: rise in trading cost and reduced F&O volumes, and investors didn't like it. Within minutes, markets turned from green to red. But this makes one thing clear: government wants to reduce speculative F&O trading, as the data suggests that 90% of retail investors lose money in F&O market. The second reason is that no tax relief was given to attract foreign investors in the Indian market. FIIs are continuously on a selling spree in the Indian market. In Jan 2026 alone, FIIs has done a net selling of 41,000 crore in the Indian market. In this situation, investors were expecting some kind of relief in STCG or LTCG to attract foreign investors back to the Indian market, but that didn't happen as well. And after all of that, banks' policy uncertainty and macro cues made it worse. Finance Minister announced that a new committee will be formed to review banking and finance sector, but there was no clarity given on that, and markets doesn't like uncertainty. And on top of this, silver fell by 9%, gold by 3%, and rupee also stayed under pressure, which gave a powerful blow to the market sentiment. But here's the thing: if you're a long-term investor, this short-term volatility doesn't define India's long-term story. Budget still delivered some solid positives. Capex was raised to 12.2 lakh crore for FY27, which strengthens India's infrastructure push. And higher allocation was given to rail, urban development, semiconductors, clean energy, and manufacturing, all supporting India's long-term growth story. So as a long-term investor, I see this dip as an investment opportunity. Let me know what you guys think, and don't forget to follow Quant and Quill for more such finance content.